at this point. Market news, you see First Bank of Nigeria Holdings appointing Nigerian billionaire businessman Femi Otedola as a new chairman of its board. We've got a lot of earnings. It's earnings season this time. We've got one from BOA and Transcorp. So definitely there's a lot of activity in the markets at this time. Let's bring in Mr. Olatunde Amolegbe, MD CEO, Arthur Stephen Asset Management, joining us via Zoom. Great to have you on the show. Good morning.
Good morning, Ladi. Nice to be here.
Fantastic. So definitely big news yesterday with FBNH and Mr. Femi Otedola there announced as the chairman. How do you see this impacting, the bank structure and investor sentiment towards that stock?
First Bank is, as you know, is one of the bellwether stock quoted on the exchange, and it's a bank that have had quite a bit of corporate and governance challenges over the last, I would say, possibly 10 years. And it's clear that those corporate and board challenges, have affected the performance of the bank. You and I know that when you say the bank with the highest level of all the indices you can mention, be it in terms of size, be it in terms of total asset, be it in terms of even profitability. But you will agree with me that in the last say 10 years, all that have changed. The bank.
All right, it seems we're having some network issues there. We'll still try and get back, Mr.
Some of its the biggest bank is anymore.
Okay. All right, Mr. Amolegbe, I'll come back to you once the audio is much better. But let's quickly dash on to some of these earnings now. We see, started with BOA Foods this point. We see revenue there, 728.44 billion. That's up about 74.13%. That's for BOA Foods. Full year 2023 highlights unaudited results. Gross profit, that was up about 89.27%. Pre-tax profit, we see that 12.69% up. And after-tax profit, we see that's up 22%. So we're seeing quite an impressive outing there for BOA Foods, despite the headwinds we see in where they operate at this time. We see food inflation sky high at this point. We also have Transcorp. Also, we got their earnings yesterday. Releases unaudited financial statements, and from we see for Transcorp, revenue was up about 44%. Gross profit, that was up 60% at 105.98 billion there. Pre-tax profit up 85%. Let's try and bring back Mr. Olatunde Amolegbe now. Let's try that again. We had audio issues there with the internet. Mr. Amolegbe, can you hear me now?
Yes, I can hear you.
Fantastic. So, you were trying to finish your thoughts there on the impact for the share price when it comes to FBNH with this Mr. Otedola there taking on the reins as a chairman. So you can finish your thoughts on that because we did lose you for a moment there. Then we'll go to the earnings.
So like I was saying, the corporate and the board issues that the bank has had in the last, say, 10 years had affected it. And it has affected its positioning regarding the Committee of Banks in the country. The hope now is that the appointment of Mr. Otedola sort of starts to bring to rest some of the corporate and board issues that the bank has had. And the hope is that, gradually the banks can start, assuming its position, again, in terms of the size, in terms of profitability and other indices. And then the shareholders of the bank can start to benefit from, what we know is clearly one of the bellwether banks in the country.
All right, I'm still looking at that, the financial services sector. We see the banks, the fugas. We've seen a continuous decline in that counter for a couple of days now. From last week, also, we're seeing losses as much as 9% on their share prices. What's going on? Why is the profit taking continuing so long when it comes to financial services in the market? Mr. Amalogbe, I don't know if you heard me.
If you could take that again.
Yes. So for the financial services counter, we've seen continuous decline. Profit taking is still going on that counter. Even at yesterday at the close, we're seeing the fugas there, the tier 1 banks down about 9-8%, up to 10%. Why are investors taking profit there so much?
Well, the investors have also seen gains of 30-40% on some of these counters in the last 3 months. So the market will do what it will do. Typically, when people make money, they want to take some of it off the table. So I think what we're seeing now is just a natural profit-taking trend that normally the market always adopts. The expectation is that the price will come down, and it also provides an entry opportunity for people that did not enter before. The fundamentals of these companies are still strong. We've seen some of them started to bring their results out, their unaudited results out, and see that their performance is strong. So, so the market is just doing what it will do, which is typically when you see gains, people want to take profits off the table. And so my expectation is that, very soon it will turn around again, and we'll probably see another upward trend in the prices of these stocks.
Right, we'll definitely be watching out for that. But you did mention, investors that are on the sideline also trying to get into this market, and definitely a pullback is the best option, to get into the market. But looking at the way things are, at this time, there's a cost of living crisis, inflation, currency devaluation. Investors, consumers are having to deal with a lot at this time. Talk to me about how this is impacting, the desire to invest. Is it still there at this point?
One of the major side effects, or main effect, if you will, of inflation is the fact that the cost of living goes up, disposable income comes down because, of course, you're now buying products at much higher prices. The direct impact of that is that you have lower savings. Lower savings also means less money available for investments. All right, and while it appears that we have not seen that impact the stock market at this moment, is that the major players in the market seems to be institutional now, not necessarily the retail investors. So until we actually see statistics of retail investor participation, I suspect that what we're going to see is that retail investor participation will probably have reduced a little bit because, again, because of higher cost of living, savings is likely to have also dropped. And then the amount of money investors are able to put in investments will probably have reduced also. But the exchange is probably not feeling it that much because, of increased participation by increased participation by the institution.
Okay. All right, Mr. Amalogbe, I guess, at some point, some people rather, eat than, take that money and go invest, because a hungry man, you can't really be investing much because you can also lose your money, out there. Thank you so much for coming on, Mr. Olatunde Amalogbe, MD CEO, Arthur Stephen Asset Management. It was great having you.
It's my pleasure, Ladi. Thanks for having me.
Thank you so much. All right, so we'll take a quick look at some of the numbers from yesterday now. We'll see the all-share index, 101,000, still above the 100,000 level, 1.90%. That was a drop we had for the final trading day of January. Equity cap, 55 trillion. Let's look at the activity, the trading activity. We see volume was still on high side there, 15.44% compared to the previous session. Value was up 102% at 22 billion. That was traded, but we had lesser deals at 14,288. Top trades, Transcore, 76 million. UBA, Zenith Bank, 61 million. So definitely, it's all red for the sectors that we track here. Banking, again, taking a big hit, down 8.07%. Consumer goods, 1.82% down. Insurance, 3.02%. Industrial goods, again, profit-taking all over these counters for the last trading day of January. So right now is a countdown to the first trading day of February, which is today. Let's see how the market closes. But maybe we might see some kind of cherry picking and get some outlook for how the market's going to fare in February. That's it from me right here on Business Morning. Back to the Sunrise Daily team.